You might think, oh, this insurance-y marketing guy from London, actually, how does he know we're busy? How does he know we're spinning all these plates? There's a reason for me being here today, and it's not really to talk about marketing. It's because for about 15 years, I reckon I had probably one of the best jobs going in insurance. So I wasn't sat behind a desk doing whatever. I actually had the opportunity to get out on the road and during my career meet about 5,500 small to medium-sized businesses across all trades and actually sit down with the business owner and actually tour their premises and see their processes, their people, understand the risks they faced and actually work together to make some practical improvements to their risk management. So without any exaggeration, I can actually say during that time we did save some businesses. We did manage to help businesses protect their people, their premises and profits. And we saved lives. And I hope that we will see that throughout the course of this presentation. So there is a bit of an agenda, but my mission is that I'm going to take the science out of managing risks and protecting your assets. It can get a bit complicated. There is a bit of academics around there, around frequency and severity and modelling. But actually today I just want you to see the practical side of risk management and actually what you can do today to improve your risk management. So the first part of that is actually identifying what your real assets are, because that might not be as simple as you think. Then we're going to look at what is the most appropriate protection. I'm going to probably surprise you by saying actually insurance is only maybe a small part of that. It might actually be no part of that. So you might find that a little bit surprising. David said to me, you know, these guys are going to absolutely love any case studies and examples. I've got more case studies in this presentation than I have probably content, so I hope you enjoy those. A little bit of advice on where you can go for practical, free advice. And at the end, this is where I really want you to get involved, because I'd like to turn you into, for about 5 minutes, into hands-on practical risk managers. And there is going to be a bit of a risk associated with this for me personally, because some of these case studies and pictures I'm going to put on here are from my career. So there's just a tiny chance that you might actually recognize your premises on here. So if that's the case, I'm sorry, but I'm sure that's not the case. I'm sure it's not the case. And at the end, I'm just going to leave you with a bit of a summary on some key tips for business survival. Okay, so what are our assets? It's very easy for us typically to think of tangible things that we can actually pick up and feel. So very often when we consider our assets, it's about, you know, our premises, our people, our employees, our money, things like that. And often these are the things that we typically think are insurable or that we should insure. But, you know, the things that often really drive our competitive advantage and our importance in our businesses are actually less obvious or less tangible. And it's really important that we don't lose sight of that and we think about these things as well. So it might be actually you as individuals. It might be you that actually is a source of strategic advantage in your business. It might be specialist know-how, technology. It might actually be the good reputation that you've built up with your customers and distributors. So a very, very hard thing to actually quantify. And on that point, I'll just introduce a useful tool that I picked up at a business school a few years ago. And you know what I like about it? It's dead simple but very practical. And that is like a mind map. So imagine you have a blank sheet of paper in front of you. Just brainstorm for about 2 or 3 minutes and think about the 2 or 3 things that actually makes your business great. What are the things that actually you're good at? And one of those things might be, well, we price very effectively. We're cheap. You know, we can undercut the competition. But then what I'd encourage you to do in drawing this mind map is to think, well, okay, why is that? So then draw a little stick off we're cheap. And say, well, why are we cheap? Well, it's because we're efficient. Well, why are we efficient? Well, it's because we've got great machinery, you know. Well, why have we got great machinery? Well, we can afford to buy it. We can afford to buy the latest stuff. Well, why can we do that? And it might come, well, it's actually we've got great backing from the bank, or we have no trouble raising capital. And if you do that for 2 or 3 things that actually really make your business great, really is an element of your strategic advantage, you can actually drill down to what actually is the real assets that are driving that. And sometimes that can actually make you think, but it's a very, very useful process to go through. Okay, so case study number 1, and I've changed this a little bit just to protect the identity, but what I can assure you it's absolutely it's dead real. So I want you to transport yourself to the Isle of Wight for this case study, and imagine a very small gift and jewellery shop. They're doing fantastically well. They're turning over hundreds of thousands of pounds. But why is that the case? Because they might as well be in a farmhouse. There's absolutely no passing trade whatsoever. Why can that be a successful business? Well, there's a very obvious reason. And what they had was they had a guy who was sitting on the ferry, and he was tapping up, over a period of months, weeks, years, tapping up the coach drivers. And he was going to them with an offer to say, actually, if you go do a little bit of a detour with your coach full of tourists and come to see this shop, what you can do is to give your punters a cup of tea, they can visit the toilet, 15 minutes, that's all they'll be there. And actually, if they buy any stuff, you're going to get a brown paper bag immediately with 10% of whatever they pay. So we're not going to sort of give you a check in a month's time. You actually leave with a brown paper bag with 10% of the takings. And hugely, hugely successful business. I'm going to use another little tool to actually help you to see how that might work. This is where, I don't think I've seen this before, this is where marketing actually fuses with risk management. I don't think anyone else has really seen this before, so I'm quite proud of it. If anybody has even studied marketing at a very, very basic level, you'll have heard of something called the marketing mix, or the extended marketing mix, or the 7 Ps of marketing, as it's sometimes called. And here they are, over here. So it's basically, say, in a manufacturing industry, it would be your product, okay, what is it that you sell? Your price, what is the pricing strategy around your product? Places, or where actually do you sell it? What is your route to market? And promotion, I guess that's the traditional view of marketing and things like that. If you're in a service industry, maybe like insurance, then the bottom 3 become increasingly important. So that is your people, So how do your people are perceived, how they interact with the customers, how do they affect the customer experience? Process is guess how slick it is. Is the customer experience really good because of your process? And lastly, physical evidence. This is something that people sometimes struggle to get their head around. What's physical evidence? I'll give you an example. People often identify with cars. So I guess if you walked into a Ford garage, something like that, you would pick up some clues as to the quality of the offer, the type of product you're buying, through the actual premises, the waiting room, the sort of collateral, the brochures and things like that. Probably is going to be quite a different experience if you actually walk into a Rolls-Royce or an Aston Martin garage. There's going to be a completely different look and feel to the whole place. And that's physical evidence. It's about giving clues to the quality of your offer. So what I did was, in just a couple of minutes, I put this case study through this little model. And it literally only did take 5 minutes. So this model actually represents what the customer offer is of this jewellery gift shop in the Isle of Wight. And what you can see here is, so we've got pretty vanilla sort of product. There's nothing special about it. Competitive pricing, but, hey, there's nothing special about that. Place, actually a pretty dreadful place, hard to find. No passing tourist trade. But then we get on to promotion. And then, hey, well, it's typical sort of media mix targeting tourism, but then we get, coach driver incentives. That might just be the thing. People find process. Well, there's a slick service and payment for both customers and the drivers. They're in and out in 15 minutes, so it doesn't become an inconvenience. And lastly, the physical evidence. Well, the shop's a shop. It's got a traditional local feel. So we go through that process of the marketing mix, and we can soon see what's actually driving the real success behind that business. And, so what then is the real risk to that business? Well, it becomes clear that it's around the promotion. If that's withdrawn, then there's actually a big problem. Probably a fire at the premises, we can probably cope with that. You know, we can probably rebuild that premises. There'll be an insurance check. The stock can be replaced. You know, there'll be a huge inconvenience and a downturn in trading, but that's all can be replaced. But just supposing the ferry company say, well, actually, we don't like your guys being on the ferry, and we're going to do something about that. Or perhaps if other retailers really sort of start latching on and the ferry starts getting swamped with people touting, coach drivers for business. So those are probably the biggest threats. They're the biggest assets and the biggest threats to that business. And if we sort of looked at a parallel business, maybe even insurance, then that could be perhaps regulation or new entrants. But, you know, for this small business, those are the real problems.